Welcome to your weekly global macroeconomic update, covering the trendiest macroeconomic events, data release, and geopolitics. In the U.S., the EIA noted on Monday that commercial oil inventories were depleting rapidly due to the ongoing Middle East tensions, amid rising drilling activities as the war in Iran drives up oil prices. The impact of the tension has fostered inflationary concerns, with bond traders now pricing in an interest rate hike by the Fed this year. Consequently, foreign holders of U.S. debt are tapering Treasury bonds, which is expected to spike borrowing cost. For households, they continue to feel the pinch of inflation shifting through. The University of Michigan's Consumer Sentiment Index for May dipped 5 points to 44.8 in April. Nonetheless, affluent Americans continue to prop up overall consumer spending. PMI data released this week points to further manufacturing expansion due to companies stockpiling goods in anticipation of price increases due to the Iran war. Lastly, Friday was a banger for U.S. immigrant, as a new policy now mandates that foreigners seeking permanent residency will now have to apply for green cards from their home countries instead of in the U.S. In China, the barrage of data released this week indicated that Asia's largest economy started the second quarter on a weak footing. Retail sales grew only 0.2%, while industrial production expanded less than the 4.1% consensus. Fixed asset investment unexpectedly shrank by 1.6% in the first 4 months of 2026. These data suggest that weak domestic consumption and real estate performance continue to drag the country's growth. Following last week's meeting between Trump and Xi, both countries have agreed to cut tariffs on agricultural trade, but Bessent noted that there is no rush to extend the trade truce, which expires in November. The trade tension between China and Europe rages on despite data this week suggesting that China remained Germany's biggest trading partner. Canada got its inflation reading for April this week, and it spiked to 2.8%, although below economists' consensus of 3.1%. The rise was driven by rising energy prices. Retail sales data continue to point to rising consumer spending, reflecting strong household balance sheets helped by equity returns to wealthier households, keeping the aggregate economy afloat. Alberta's separatist movement is now impacting foreign investor sentiment, as the Quebec finance minister noted this week that investors questioned him about the movement at his meetings in New York. This, however, should not impact Canada's planned sovereign wealth fund plans, which is expected to have a higher weight of domestic capital. Euro area GDP growth forecast has been reduced to 0.9% from 1.4% reported in 2025, reflecting the exposure of the region to the energy crisis. Business activity shrank at the quickest pace in 2.5 years, falling to 47.5 in May from 48.8 in April. Regardless, commentaries from ECB points to a rate hike if the crisis is not resolved by June. Another headwind is the crippling finances in the member states, from France to Germany and Italy. Amid trade tensions with China, the EU is now considering new measures to manage the risk of dumping. New regulations from the region this week showed more reviews are now required for foreign investment in highly sensitive sectors. Lastly, on trade, the EU-US trade deal can now move forward given the completion of the text of the long-delayed agreement. The future of Keir Starmer as UK Prime Minister remains clouded as political contenders within the Labour Party continue to push through, particularly the Mayor of Manchester. To placate the public, the government announced a temporary cut in the VAT for tourist venues and gas purchase. The economic scorecard continues to point to rising borrowing as deficit hit £24.3 billion last month.
That will continue
GDP growth for the first quarter remained abated at 0.6% for the first quarter of 2026. Reeves is now informing supermarkets to pass on savings from reduced food tariffs in full to consumer, as inflation rose to 2.8% year-over-year in April. Calls for rate hike remain stronger amid arguments that it would drive recession risks higher. And that's all we have for this week. I hope you enjoy it. Please remember to like, share, and subscribe.